When is Airy's next pop? I mean, it's gonna channel back up to 330, 340. So it's got a 10% channel. It's about to do. It's at the same fucking 280 level that it bounced off before. Same 280 level here. I mean, it's gonna bounce back up. It's got 10%. So that's probably gonna be an easy 10% swing here. But when is the next pop? So we had one in August. We had one in July. So what? I gotta wait till fucking July again? Yeah, I play this channel all the time. Every time it dips below $3, I buy. And then every time it goes above 320, I sell. 330, I sell. So we did want to, we've already sold some of it here, but, and then we bought some more a couple days ago when it went back to 280. But, when is the next pop for Airy? I mean, they've got when was their last fucking order? All right. Last month they had their EPS coming in at 0.01 or negative 1 cent. Revenue was at 10 million. They got their 2 contracts worth 6.9 million back in September. Their market cap is still at 14 million. $5.4 million contract for Air Force B-52 aircraft. That was back in July. $120 million backlog now. I still have the 2 contracts worth 3.3 million. The 2 contracts worth 1.5. Pay down $1 million in their debt. 6.6% year-over-year growth in annual sales expectations. $5.9 million contract for flight control assemblies. Landing gear for the Navy E-2D Hawkeye aircraft at 2.6 million. They did do an offering. $4 million follow-on contract for the F-35 Lightning II gear components. No, I'm here for you, period. Ayo. So you telling me I get a discount? I mean, they have a $120 million backlog. They've got all of this money. The reason that I'm thinking that this might pop a little bit earlier is because we've got the budget that got passed, and the Democrats and Republicans only agree on one thing, and that's military and defense spending, just where they want to put the money. So all of those aircraft that have gotten sold, whether it was to Ukraine and Turkey and South America, and then the replenishment that has to be done, someone has to do those landing gears. And it's going to be Airy. It's frustrating because something is edging and is ready to explode. And it just hasn't. You know what I mean? It just hasn't. Does it need to catch an institutional bid? Maybe, but like Airy, again, people will look at the long-term chart because that's what we've always done. But a lot of these companies, have transitioned over time into different companies and different things. And so they're not what they used to be. So when you look at this with reverse splits and stuff like that, you're like, holy shit, this is the dumbest fucking purchase of all time. Like, this is stupid. Why would anybody play this? And you're probably right. But this company has transitioned into something different, and it's just something that, I mean, look at this right here. I mean, these are bounce back. I mean, these numbers are what they are. This is, this has the potential to be a fucking player in a massive defense sector. And, I'm just trying to figure out, like, are they going to take advantage of this opportunity or not? Like, can they complete these orders or not? If there's a backlog and you can't complete the orders, then nobody gives a shit. You know what I mean? But $120 million backlog. Contracts just this year totaling approximately $22 million on a $14 million market cap in the defense and military sector. Landing gear components for, a lot of these government, contracts and some of these defense planes. It's like EPS is negative 0.55. Share float's only 3.87 million. The chart is terrible. Yeah, a lot of charts are terrible. You see what I mean here? You see how they switched their business model? So when you're looking at that old chart, you're looking at back when they were doing welding and air industry machining, right? But now they've switched over to military and commercial. Do you understand what I mean by this? So hear me out, okay? Not telling you to buy this. I'm just saying they went from having a business that, obviously was from a stock perspective was not fucking investable. But they transitioned from doing private sector to military and commercial, but mostly military. And the military pays a lot of money. They overpay, and they love to extend contracts. It's like a subscription-based service. Now, obviously, 2022, 2023, when Biden was in office and a lot of money was going over to Ukraine, there was more money coming in. So there's a little bit of a slowdown here. But when I look at this, okay, again, this is just me. I'm just thinking. I'm just thinking through this, right? But like, they beat on estimates, right, through Q2, like, or they were down. So estimate here, they had negative surprise. They beat, negative, beat. They're expecting Q4 to be 13.5 million, so 35% increase in earnings, down to 12 million, but then back up. So expecting a little bit of a dip right there, right? So I see that, but price to sales ratio at 0.24. Return on invested capital is trash, but they're not investing anything right now. Gross margins at 22%, EBITDA margins at 11%. Again, this is something where you're thinking they've done that pivot, so it's going to cost them money to pivot. but they're getting these contracts and they've got a backlog of 120 million now. Can they, that's the question. Can they capitalize on that? Or is it a disaster? They fail, they fail to catch up and they lose those contracts. That's the coin flip here. If they can shore up that backlog, they'll receive additional contracts and they'll be able to expand, and that's going to be a major catalyst for them. But they could also fail to keep up with that backlog, lose those contracts, and then everybody piles out and it becomes worthless. So that's why it's a 50-50. Look at that gross margin percent. 13, 16, 12%, 13%, 14%, 22%. Operating margins back in the black. EBITDA margins up to 11. How many shares you have? Oh, I only have like 350 shares. That's like $1,000. But we've up and down traded for like 3 years now. I know, I'm deep diving into it like I have like a $100,000 position on it. I mean, it's very hard to look at these numbers and make my assessment based on these, because I'm not investing on what the company was and is. It's what it's becoming and what the potential is. And that's why it's a gamble. It's okay. From a book value standpoint, this is not really anything to give a shit about, right? They're up and down. They're barely fucking floating. Yeah, they're making more revenue, but they also, you know, having to make up for a lot of bad decisions in the past when they were doing, you know, privatized stuff. But they've moved into military and defense, which is a massive contract. You know, beware the military industrial complex, and they've secured some massive contracts. So can they keep up with that backlog? If they can, this company could go 1,000%. But if they don't, then it's like, pff. So total assets are up to 57 million on a yearly basis. Annualized liabilities are pretty much flat. They've come down from 42 million in 2020 down to 36, which is pretty much flat. Equity's down a bit. Total debt's at 27.87 million. I mean, obviously that's from the transition period. Net debt's at 27 million. That's not great, but obviously I'm looking at what potential could happen. Total revenue is at 55 million. 50 million this year so far. Cost of goods is negative 41 million. 8 million gross profit, which is, you know, better than everything except 2021 when COVID happened. After COVID, operating income actually went green. Expecting 500,000 loss this year. Pre-tax income still negative. Good news about negative income is you don't have any taxes. Look at that, negative 22 million back in 2017. I don't know, man. I don't know. All right, is Nvidia fucking killing the market right now? Yep. Is Google at least fucking catching some of this? Oh, marbles. Fuck, I was in the middle of marbles. Jesus, I'm sorry.